Thank you for your time. Thank you for your interest to block a slot on your calendar to meet and discuss with ourselves on the performance of the 9 months 2023. And this is the session that will be quite put forward as well on quarter to quarter, and that's what we would like to create. Despite the market requires or the compliance is only 2 sessions every year. So we continue to the disclaimer. So we want to disclose also the recording is in progress for any reference points, and also for the team to catch up on any action or discussions. So please be noting this, and as the regular disclaimer goes through the discussion sessions, we are disclosing this information are made prudently available on the basis of whatever we have of histories and the current information. Any interpolation, any forecast projection should be quite taken at the risk of the recipients and at their calculated stand. And overall, we're trying to make it quick through the agendas. We will just highlight on our packs to the industry and the country, and we'll bring a quick highlight on the financial, and then we'll take any Q&As from your side. Oman Cement continue to be leading its kind of commitment to the country, to the nation, to the people, and to the industry, and whatsoever affiliated downstream lateral business to the cement productions, to continue as a leader in the cement industry with concrete value of confirming to all international qualities and brand sustainability as an image for Omani products, and being quite environmentally friendly, and keeping the stakeholders at our centric attention and centric focus, specifically once it comes to the customers, to the community, to the overall shareholders and stakeholders in this specific partnership. We are one part of the community and complementing each other. So we have the due care as a corporate citizen, and that is the core value that we don't dissociate from, and carry forward to add value to wherever the economy exists, either in Muscat, either in Duqm, either wherever Oman Cement is intending to go. Once it comes to the capitalizing on the strength, we have unleashed values over the years, over the past 4 decades, and we are growing, inshallah, strongly with the new partner in place, with so much of initiatives to be translated on ground once it comes to the 2024. On overall quantitative and statistics figures, our productions stands as you see it in the green side once it comes to the comparative of the Q3 2023 versus Q3 of 2021. In the blue, you find the 2022, and in the green, you will find the 2023 itself. So in 2023, unfortunately, once it comes to the cement sale and the production, which goes hand by hand, because we produce only to sell, and we don't stack specific inventory of cement unless transiently for a few hundreds of tons that could be quite sold on spot. This is mainly due to the market conditions, and if any one of you have attended earlier sessions towards the last year performance and even the H1 or Q2 performance comparatives, we've highlighted that 2022 was the most extraordinary year in the performance for Oman Cement once it comes to the volume. Due to the macro global conditions of the war in Ukraine and Russia, between Ukraine and Russia, and the disruption to the supply chain, and the end towards COVID itself, where other markets who used to help into supporting the nation into its demand to the cement has shied away because of their increasingly high exponential cost of the production, which have not helped them and have left those people who've been buying from them knocking on Oman Cement side. So Oman Cement has made its commitment and continue to produce at that time with even commitment to the country to maintain a specific volume with no lowering to that specific commitment. So 2022 was an earmark on the volumes. and once it comes to the sale of cement. However, once it comes to the clinker production, which is the intermediary and significant value created in this intermediary product, this year is an earmark. I'm speaking this year of 2023. We are almost heading to beat the record of whatever we produce over the last 37, 38 years of existence. Further, if we go on the performance, I just intentionally, I brought it up here to show you the performance against even the parameters that we have been stretching ourselves on the budget, which has been chartered with the shareholders. On the right-hand side, you will find the green representing the actuals, both on the clinker and the cement productions and sales. They are higher than the target by a significant portion of between 10 to 15% minimum. And this is how we will, hopefully will deliver the results towards the end of the year with the commitment to come. Now, in performance and overall, please be mindful once you read the figures for any kind of projection that may be good to change for any extraordinary event, calculations, adjustments, directions, external auditors' inputs. So we have these specific revenues on the P&L highlighted year on year. We are almost going on the tandem to grow, except 21 was a bit sluggish due to the COVID slam dunking. And the revenue we have maintained it in the 2023 despite the volume issue. If you recall here, the volume was less in comparison to the past year, and it has delivered this value in essence that we continue to level the playground by elevating the price a little bit in a most competitive stand to the market. So that price adjustment has helped into really breaking to the revenue side in the latest estimate, since we are speaking in November itself. Once it comes to the net profit and the EBITDAs, also they are almost increasing in the range between 30 to 50%. But this is subjective to the discussion with the external stakeholders, internal stakeholders, and getting things approved if there is no extraordinary event or adjustments required. The productions, which we have showed you in the first slide, continues in a comparative from the 2018 to 2023 is still standing right. The only part which we've highlighted that 2022 is extraordinary once it comes to the cement production and sales. Product-wise, we continue to deliver the same product to the market, but we are maximizing the new green cements or green initiatives, specifically in Al Burj. This you might find it in gray color or light gray color. So we introduced this somewhere around December 2022. If you can see my cursor, and let me just do the pointer for you, please. Here's a pointer. So we launched this somewhere around 4th or 5th of December 2020 itself. And every year we've been pushing in order to maximize the use of this green cement, which is environmental and climate friendly. So we will close the year hopefully with the almost 30+% of this specific product, which is also on cost composition. It's a bit competitive to the ordinary Portland cement, but meeting all the standards requirement and the strength and the quality check and balances, which is also attested by the authorities. I think you need to monitor the chat if there is anything, please. And overall, we are stretching this figure mainly, or this graph with some kind of figures down to give you a more highlight that the Oman Cement has never recorded a loss since inception and wish to continue the same. You see that revenues itself, we are flat roughly with few 100,000 into the adjustment. If I say 2022 was around 66.7 million, and we expect that this year we'll close around 66.8. However, once it comes to the profit and loss itself, you will find the net profit will be increasingly adjusted upwards if things move right, and with this is subjective to the board and internal discussion and adjustments and external auditors signing off. So this is mainly the highlight on the performance. And with that, if there's any question, we are all ears to attend and answer, please. Fnan, can you just check? Any question? Hello, can you hear me, guys? Gentlemen, young ladies?
Hi, thanks for the presentation. One question from my side. You mentioned and highlighted the contribution of Al Burj cement has been steadily increasing since its introduction. Can you just give some more color on how the pricing of this product and the margin contribution to margin is vis-a-vis your other products? And is there any risk of cannibalization from the increasing sales of these products to your existing products, or no, that doesn't seem to be the case?
So, see, Oman Cement, one thing which is mainly to do with specific innovative solution, which is also SDG, ESG is compliant. Once I say SDG is Sustainable Development Goal, and ESG is environment sustainable goal to go green. We have this Al Burj mainly is a lower by almost, like, if I'm not mistaken, between 10 to 15% in competitive price to the OPC, and also we offer sharing partnership on this kind of specific reduction. It depends on how the loyalty of the customers. It depends on how the customers also lifting on over the year. So part of this specific saving goes contributing to the margin, to the bottom line, and also helping us into keeping the performance and overall for the P&L positive, specifically year on year. And that's one target also for next year. We are trying to push this further to the market. Many of those users, either being quite wholesalers or retailers, they are really now into demanding it. We have some limitation on producing these specifically for the retailers once it comes to the bags, because we have a limited capacity on bag production per day. And we are investing into a specific project for the next year to come around third quarter. And if this is coming right, then at that time, by end of third quarter, hopefully we will have significant capacity available for supplying even to the retailer once it comes to this product. Any question other than this, please, or additional to this?
Sure. And in terms of your, improving profitability, etc., can you also highlight any cost optimization measures, etc., which you might be pursuing, and what sort of impact you're expecting for that?
See, now we've already spoken about the innovation cell previously in H1 or quarter two. We have innovation cell, which is almost just touching with the industries and testing different materials in the use. So now currently we are having a specific verification of mixes over the past quarters, which has helped, I would call it, slightly on the performance. But there is something which is going on the background, and if it comes to be quite right, then it will help us also for securing base for next year on offering further discount to specific loyal customers. So we are into this. And also we have these kind of projects which we have spoken about earlier. about those alternative fuels. We have already invested in the alternative fuel and the solars for the administration building, as well. We have put last year and the tire chips. So we are using the tire chips as an energy replacement for the natural gas, sparing the natural gas for the country so they can redeploy it for a higher economic value buyer and use. As well, we had indicated earlier in the last quarter session that we are taking one major significant project on consideration with the local partner in Oman. It's an authority approved partner to use the waste concept. We are doing some kind of study on this and in discussion with the authority. And once things come right, we will bring it further to the market. May you might have seen some news about the MOU have been signed a few months ago. And this is mainly using as alternative fuel, using the municipal waste and concept, being quite also environment friendly. So we are also trying to save, if things move, trying to save on the cost of investing into those major projects, onto the landfills, onto the transportation, into the environment friendly consideration. So if this comes, there will be quite significant stands on the saving towards the price of the per metric on the saving to the cost per metric ton produced. As well, also we are moving on the capacity enhancement and efficiencies in the parameter of the plant with our partner Hawashin team. They are also bringing their value by expertise and benchmarking, and trying to utilize these kind of debottlenecking enhancement in place to increase capacities with the slight modification, very minimalistic investment on the capex, as well also efficiencies on how we contain the cost once it comes to the natural gas and the waste heat recoveries, because once it comes to the natural gas, is the almost 1/3 of our total cost of Oman Cement comes from this side. And we are trying to find the way of just doing with much cheaper and much environment friendly replacement. And that is the one which we hopefully will try to deliver it by next year end, inshallah. Any question, please? What is the question? Can you put your voice? I'll just.
Yes, hi. This is Neetika from Ubar Capital. Thanks for taking my question. So I just wanted to understand how are the realizations looking like, the price realization, and what is your view? Because given you are in the markets, what is your view on realization going into 2024 now?
Allow me a second, please. I want to just give you. I'll come to this. Just give me a second. I'm trying to look at the figures and I'll give you some input. So if you go back here, because where is that slide specifically? If you get to, my screen is seen. Can you see my screen? Yeah.
Yes, we can.
And also, sorry, sometimes you'll find me asking the team here because I have an issue with the system. It doesn't come to project. So the point we brought this second side of the slide showing the actual versus the budget, because while we had found that this year might be quite challenging on the selling volume, specifically that we have increased the price by almost, I would call it, that is 10%. 10% once it comes to the bag price, sold volume, versus almost like between 5 to 7 to 8%. Depends on the customer's commitment and the loyalties once it comes to the bulk. So we adjusted the price upwards in 2022. However, in 2023, 4, definitely we would need to do different considerations, specifically that we are trying to target higher market and higher volume to be sold. So we had lost value over the last 5 years, starting from 2015, even once this natural gas case came with an escalation. And the price eroded there was almost 3% year-on-year escalation, which has started with a price of $1.5 per metric ton in 1.5 per MBBTUs bought from the government to somewhere now at $3.8 cost. So you can see how we got impacted by these specific MBBTUs loaded escalation, as well also the impact of the manpower. Next year, it's a bit dilemma how we need to balance our forward growth perspective, specifically to attract new customers and further volume to be sold. And this is totally subjective to the market conditions, because one matter which has not helped us to deliver the volume in 2023, the last 9 months, is mainly because market has not been the same as market of 2022. Those macro global conditions, whenever the coal prices skyrocketed, and the neighborhood suppliers or competitors, they have not been able to come. So demand came to Oman Cement. So definitely that we can highlight once we close the year with more assertive direction on how we move. And hopefully we can just get this somewhere around, I think next discussion will be around March. We planned it around February or March, and we'll be keeping you posted. If anyone is interested to be quite receiving kind of communication from us, because we also call for specific discussion and meet before the sessions. Anyone would like to clarify, we are available or over the reach of the contacts listed here, and I'll keep the contact available for you to reach us anytime. Any other question, please? Before, I think Afnan, our board secretary is here. You said there is one question on the chat. Sorry, somebody coming in? Keep the question to the last. Anyone coming in, please, with a question?
I had a follow-on question, please.
Yeah.
So how are you, with the planned capacity expansion, how are you looking at utilization levels? I mean, are they going to stay stable or going to go a bit lower? How are you looking at that?
Yeah, see, this is already, you might found it in my last answer, or both in enhancement. The new partner is doing this kind of debottlenecking enhancement with a small slight investment on capex, and this enhancement is coming right, because it's also in the last session we've indicated almost around 1,000 ton of clinker per day got produced starting, I think, if I'm not mistaken, third quarter around July. And that is really available for us if we want to push the pedal, and if there is an accelerated demand in the market as of 2022. So we are available to supply. What was the other portion of the question other than the capacity?
The utilization levels going forward.
Utilization, see, capacity is available. Utilization will be dependent totally on whatever the market lifting, and also the new aggressive strategy that we are trying to reach a new market. There is an update for our kind of market reach and pricing on differentiation aspect. So this would be quite triggered in the 2023 remaining month of December and the coming 2024. But this will be felt once we secure this specific new market. We started obviously on specific quest this quarter 4, but we can highlight for further on it by next discussion session, inshallah.
Thank you so much.
Thank you. Yes, question, and Afnan?
And that's from my side. So we have
Yeah. Yes.
Okay, so Ahlam Al-Harthi asked why you budgeted less than the actual number for September 2022. Are there any challenges let you budget these numbers for 2023?
Yeah. Thank you, Ahlan. Nice question. See, now all those kind of assumption or projections or even budgets are based on forecasts of specific macroeconomic variables and also local market demand and supply to demand and the competition. So the landscape is studied on overall side. And for 2022, even we have tried to be quite conservatively right. So the performance itself came to be extraordinary as we spoken in all parameters because the country was going hungry for the supply or the buy of the cement from everywhere, specifically in the neighborhood. We have not helped, so we footed the support. So the actual came to be quite significantly positive. Even for 2023, we in 2022 during the planning side of the cycle of the budget, we've seen that 2022 is totally extraordinary and it might not even be repeated. And that's also reflected here as what we are highlighting for quarter three. Our achievement is gapping once it comes to the cement production and sales, because market has not been quite upticking as whatever it has been in the last year. So budget was quite sluggishly or slightly not conservative. Board has really stretched us right and left, but this market has came to be quite now speaking. Yeah, we are trying to catch up with 2022, but it's not the case. We still need to be quite positive, and hopefully by if there's a miracle can happen in December itself and there's a huge knock for bulk cement, then maybe the story comes differently because capacity is there. Hopefully I attended your question, Ahlam. And Afnan, is there any other question on the chat or audience? Please, any of the attendants or the audience can bring the question across.
There is one question from Bishan Bahla from Vision Capital. She stated that she noticed that the discount offered was much lower during Q3 2023 and asked if that was a strategy going forward. So it's just for a one time.
Strategy on prices need to be quite re-looked at because honestly, we stated also in this competition market being quite that no one gonna scratch your back better than yourself. So we end up giving much of discount in, I would call it, complementing the partners in the supply here in the country to try to differ the force of the heat on price reduction. The issue which has helped, I would call it, the other countries' manufacturers, they have huge economy of scale and latest technologies, which has really made it a bit difficult not to offer them discounts. So we've been offering discounts over the years, and the pricing strategy towards the end of last year, we had got it changed, revised, and we've moved it to the market. However, 2024 might be another story, and we will echo this once it comes to the next sessions. Any other question, please? From the audience, chat, there's no question, right?
Can you just touch upon how is the flow of cement from how is the inflow of cement from the neighboring countries, specifically UAE?
Bishan, can you please unmute your mic?
Hello?
Yeah, you may please ask your question.
Thank you for the first answer. Before you answer the question on the flow from neighboring countries, the reason I was asking about the discount percentage is because...
Sorry, gentlemen, because I muted the speaker. We have this system issues. Could you come again, start from whatever the question?
Absolutely, yeah. Can you hear me?
Yes, loud and clear, please.
Yeah, thank you for the first answer on the discount percentage, because the reason I was asking is, a few years back, probably 2017, 18, 19, what we witnessed was one of the challenges that Oman Cement faced, or at least the cement producers in Oman faced, is when it came to sort of dumping from our neighbors. The prices offered were far more lucrative than what the local producers offers because of economy of scale or excess production, and we lost a lot of market share locally. Now, whilst I realize that the company's done a great job in sort of building back that market share, price will always be a sensitive topic for customers. So while you have your loyal customer base, there will always be a certain portion of customers who want the best price. If the quality remains constant. So that's the rationale for sort of asking about the pricing policy on a generic level. So if you could just comment on that, where you have a pricing policy versus competition from neighboring countries who are ready to dump at any cost just to get some cash flow.
Always once you the good thing that you are not staying static, and always market is dynamic, and everyone looking after his own margin, definitely, as investors, as individuals, as company, and even players in the same industries. So we are very, very vigilantly attending this, and we understand people definitely will ask for price discounts if all people are offering the same qualities and available at the doorstep. However, there's added values that Oman Cement offer on the post-sales services, wherever now our people are even visiting those places, attending their kind of mixes, advising on specific parameters on the technical requirement, because also we have now the partner who is very experienced and have multiple ready mix and concrete business around the globe, and they have been adding this value to the market wherever they are. So we have loyal customers whom also, and this is I need to bring maybe some slide next time. Thanks for the question. Our kind of strategy on the product mix is also the product split. So the product split between bulk and retail, we have moved it year on year differently according to the market conditions, and dynamically we revise this every quarter. Unless there is a significant shift, then we do it monthly. However,
noted.
However, what I want to pass to you, the audience, and you here, is mainly that we have brought whatsoever we secured it in starting 2021 start itself by letting customers signing the commitment. So we have contracted quantities, committed, so quote unquote committed quantities, wherever those loyal customers stay to the stick of delivery of those lifting. And we are improving on this by putting specific enhanced clauses that is of mutual benefits. Yes, I want them to be winning and being quite having nice pocket, but also they need to support us in this partnership. Our business model is not that we let our partners who are committed to lose, nor we that they take the big pie and we are still dry. So on mutual benefits, these kind of forms of agreements is getting updated for the discretion of continuities of the business and the loyalty tick of the box. And we review these contracts down the line on the performance. So if they are not up to the tick, the penalties clauses might trigger a kind of an action. And that is one part which we are tactically attending it from the chief executive levels to the commercial marketing and sales team.
Noted. Thank you so much. Thank you.
Any other question, ma'am? And I can see there's thank you. Yeah, for this, Ahlam Al-Harthi. So thanks, Ahlam. Any other question from the audience, please? We are all here to answer whatsoever queries, question. Even you want to discuss a point which might be related to the performance of the Q to Q, we are available to attend it for you, please.
I had another question.
Yes, please. And who is this?
Yes, this is Bishan Bhala from Vision Capital.
Vision Capital, you need to visit me because it looks like you have so much of interest about the company. So I will be very keen to meet you, but I also definitely anyone from the audience can come because we need to give it a level ground for all to have the information on a timely basis. Yes, please.
Absolutely. It would be a pleasure. Could you just comment on the finance income? We've noticed sort of the finance income. If I look at the first half and what it was for Q3, and sorry if I missed out this question before. If I felt the finance income fell in the third quarter. If you could just comment on that.
Yeah, mainly, see now, the good thing, you made me laugh, by the way, I muted my mic, and specifically towards this, because it's a kind of dilemma. Are you looking to, I would call, to improve your bottom line, or are you looking to improve your availability as a kind of a cement player and existence to supply the market? So definitely during hard time, you will play the financing net income to be quite as a kind of helping into the performance sustainabilities. So in 2023, quarter three starts around July, we end up prepaying the facilities and also prepaying the facilities in place for whatsoever we availed. And our income stand clean with no charges once it comes to the financing cost. So currently we are having a clean book, and we aim to close the year with a clean book with no debt on the load, unless there's one tender, if it comes to be concluded by December, then we may board this specific debt element, which is sluggish, a few millions of Omani riyal. That is, the balance sheet can take it and absorb it, and it will not impact the net financing income significantly. So yes, this year the net financing income has been quite contributing element, but also the operating profit is increasing rightly because we have adjusted the prices, despite the volume was a little bit lower. By what percentage, gentlemen? The volume of cement sold, how much percentage we sold quarter to quarter? Can you just check? So I'm just getting the volume. So at least the volume itself is one, I would call it, missed factor. Other factors are positive. The financing net income stands positive. 2024, there might be different strategy on the growth, different strategy on how the source of funds need to be arranged, on the cost of the funds that need to be sourced, and on this level of how we move forward on delivering the commitment. But we are to match this value wherever it is.
I'm glad to hear that, and like you said, it makes sense to sort of deploy that in your business operations. Last question, I understand it's a board decision, but is there a scope in terms of if there's a delay in capex or on the requirement of funds, there could be sort of a dividend revision from the company closer to the historic levels of 20 to 30 paisa?
I would refrain from answering this, gentleman. We have continued to be positive to the investors, and our cost will not be changed. We keep the market happy and we keep ourselves happy, but on the figures to come, we will deliberate subsequently once we close the performance. But Oman Cement, you answer this question: have it ever failed not to at least distribute a year? A question to you and the audience. Thank you. Another.
Thank you so much. Wish you all the best.
Thank you.
Is there any further questions? Is there any further questions from the audience?
No.
No questions. No questions.
So I think if there's no question from the audience, we are still available for another 5-10 minutes. So if anyone has any question, would like to clarify, we are available for another 5-10 minutes. Other than that, I'll be quite happy to entertain and receive any call from you guys as we are showing the presentation contact slide. So one thing which was about this delta on the volume, so it's almost 5% lower than the last year, despite the last year volume sold is the extraordinary quantity and unprecedented over the history of Oman. There is some chat. Ahlan. So after your permission, audience, since I don't see you, if you don't have any question, shall we adjourn the meeting and we say thanks? Gentlemen, young ladies, anyone left in the lobby because I don't see them?
Thank you, Oman Cement team, and all the
Hello?
best, inshallah.
No, sorry. And I'm talking, the speaker is off. Sorry, ladies and gentlemen, I couldn't hear. Could you come back?
Just to say thank you for your team and all the best, inshallah.
Allah يحفظكم, and please, I believe this is who, Ahlam?
Yes, Ahlam.
Ahlam, thank you for the wishes, and whoever also we have not heard their wish or support or clarification. If you still have anything, we are available. Because I was asking you and I was assuming that you are talking, but the speaker was mute. Unfortunately, this system needs to be quite updated. Afnan, we need to invest into a new system, inshallah. Ladies and gentlemen, with that, I wish to say thank you. And hopefully 2023 be one of those among us best years. And 2024 comes to be among us the best years further. Thank you. Afnan, we can close.